So we are live. Thank you very much, Federico, for joining us to have this amazing webinar about AMN. We are in the AMN month, probably. We even didn't know before that today was the launch of Balancer V2. That is also amazing news. So really a lot of interesting things that, for me, the most important change in the last 2 years of the AMM, no? What do you think about this change? Because we are going to talk today about the Uniswap version 3, but we are in the day that Balancer has launched the V2. So yes, all together.
Yeah, no, absolutely. So thanks for thanks for having me. It's always a pleasure to do these sessions with you guys. Yeah, so it was in the air. Fernando was brewing this new version, and yeah, I mean, I agree with you that AMMs are probably the biggest. I would say, if not the biggest, one of the biggest for sure advancement of DeFi, and I mean, Uniswap kind of pioneered that with V1, V2, and then Balancer and Curve, and I think they all kind of have special powers. So Balancer, even with the Uniswap V3, I think still Balancer is the only one that allows to create kind of more index funds with multiple tokens. So that I think is a special power of Balancer versus more Curve and Uniswap. They're probably going to compete with this liquidity we're going to see in a second, in the as we talk about that. But no, it is exciting to see what everything that is going on with DeFi. It's
amazing, cool. And a lot of things to think about and to understand the returns and the risk and all the things. So if you want to share the screen, so
yeah, absolutely.
Let's do it. So congrats, Fernando, for the new, and we will have a specific webinar about Balancer V2 that for me is probably, in my opinion, right now, with what we have read until now, I think Balancer V2 is very big value proposal. Yes, for me, is probably of the biggest.
I mean, Balancer is for sure one of the one of the most I would say like highest yielding protocols, like according to stats and also users, to be honest. Also people using liquidity folio, they're heavy users of Balancer. Also, like I think they're going to change the reward system. So there's a lot to be done there. I'm really looking forward to also integrate with the new V2 on liquidity folio. Definitely happening.
So thank you very much. I recommend liquidity folio. First of all, if you can show us the liquidity folio you do, but so people can see one of, for me, the best tools to track your performance in AMMs. That it's not so easy task, as you know.
Yeah. So liquidity folio, I mean, it's a tool specifically for liquidity providers, and so that's why we talk about Uniswap and Balancer and Curve, and the idea is to be like a decision-making platform for people providing liquidity. So what people can do, they can come and basically see the yield of all the pools, like across the different exchanges, right? Also the biggest layer one, but also a few like QuickSwap and layer 2 and a few others. And then once they decide, they can have this catalog of yield. And then once they decide to invest in one pool or in one exchange, they can come here and they can add their address and really get all sort of statistics for their investment and track, how much you're making and how the investment is performing, and so on and so forth. So that's kind of the idea. Just wanted to mention, like, Uniswap V3 and obviously whatever Balancer that just launched today it is not yet supported, but probably for Uniswap is a question of days. So maybe even just this week, and then Balancer hopefully also very soon. So just stay tuned for that. I don't know. I mean, Jesus, today we said like to focus on V3. Maybe we could do like another Balancer focused.
Yes, for sure we have to do it.
right? But yeah, so if that's okay with you, I mean, I hope it's not too technical. I mean, I think like as a general idea, as I was preparing this, I figured that a lot of what's happening with Uniswap is actually like all these new changes are actually very technical. So I mean, I tried to make a few examples and take you through a real case example, and hopefully it's going to be clear. But whatever, in terms of question, follow-up thoughts, I'm in any case, reach out to me directly for if you have any, because I understand it's very complex.
Okay, I let you here. I will join after your presentation to make some questions. So thank you very much for your time, and we will see you. We will watch.
Okay, cool. So yeah, so I mean, we saw liquidity folio. Just in terms of myself, my name is Federico. I'm the founder and creator of Liquidity Folio. As I mentioned, this tool for decision making around liquidity provision, and the platform is getting really a lot of momentum. If you're an investor, maybe LP, you're using it. There's about $1 billion of liquidity tracked on a daily basis, so that's very cool. And what we wanted to do today is really kind of focus the attention on Uniswap, and specifically on Uniswap V3. There's a lot of movement, right? There's been like this launch of V3 balancer, a lot of kind of new version of DEXs, but today kind of that's the focus. And the way I wanted to do this is kind of remind you a little bit of in terms of what Uniswap is, the way it works, and then how V3 is different. It's actually different from V2. There's a bunch of new terminology and new concepts, and then more what does it mean for you as an investor, maybe a liquidity provider if you're already providing to V2. What does it mean, and what are the implications? That's kind of the general idea. So I mean, starting with what a Uniswap is, I mean, I forgot to say, maybe, I mean, my target is to use maybe 10-15 minutes, and then obviously, if maybe you, Jesus, and others, if you guys have questions, you can we can do some Q&A. So a quick word about Uniswap. You probably guys know what Uniswap is. The largest decentralized exchange, was also the first one to really employ a market making function. So it doesn't have an order book, and I think in general it kind of created all new business model, if we want, for investing and to do a passive, quote unquote, market making. Obviously grew a lot. These are stats for Uniswap V2. Grew a lot, and doing an enormous amount of swaps every day, like 2.7 billion. Just for reference, like Coinbase is around 1 billion a day. So that's gives you a sense of the magnitude of what Uniswap is. What we see today, and the focus of today is really Uniswap V3, but it's important to understand that this is already the third iteration of Uniswap. So everything started in 2018, end of 2018, with Uniswap V1, and as I mentioned, that was really the first DEX, the first AMM, like off an idea of ideally originally Vitalik. And that kind of grew and proved the concept. It got to about $1 billion in liquidity with the prices of last year. And then this was also the time when liquidity folio launched. Originally, liquidity folio was very specific on Uniswap. It was called Uniswap ROI. It was really dedicated to Uniswap. Also because Uniswap was the only exchange in town. And then in May of last year, so about 1 year ago, there was the launch of Uniswap V2. Now, we can say the Uniswap V2 compared to V1 wasn't very different. There were a bunch of improvements, but I would say it was mainly in continuity. And it grew exponentially, as we said, from 1 billion to more than 8 billion in less than a year. A lot of happened since then. Vampire attacks, SushiSwap, the growth of the entire ecosystem. And what we're looking at today is actually Uniswap V3, so the new version. And here, what we're looking at is a totally different architecture. So this is a very much of a step change compared to what we have today, V2. for a number of reasons. The main reason I would say is this new concept of so-called concentrated liquidity, which we're going to see in a second what that means. But also other, from other perspective, a bunch of other functions like improvements, for example, Oracle, like a better Oracle. So maybe not improvement necessarily for the user, for the investor, but more for the entire ecosystem that can now use them, especially the oracles, to be more. So that's kind of the idea, and we're looking at something very different from what we had before. To kind of as a segue to look into Uniswap V3, I just wanted to remind you of what happened when you provide liquidity to Uniswap V2, which is the current version and the one that has the most liquidity. You're probably already familiar with. So I wanted just I thought to walk you through a real case example, just a quick one to remind you of what we're talking about. So let's assume that you are a liquidity provider. I am a liquidity provider. Let's assume that the price. Let's consider first off the Ethereum DAI pool, which I think is an easy one to consider. One is $1, the other is the price of Ether. We'll all know. And let's assume for simplicity that the current price of Ethereum is $4,000. So 4,000 DAI. And let's assume we want to provide liquidity for example, putting in 1 Ether and $4,000. Now you're probably familiar with this. When we provide liquidity to Uniswap, we need to lock in the two assets in the proportion of the current price, right? So 1 Ether is going to be in $4,000. Now, when we do this, there is nothing particularly new, right? So there is this function that you probably guys remember is hyperbole that governs the quantity of assets inside the pool. As we said, like the price is 4,000, so we put in one Ether and 4,000 DAI. As we know, these are equal value in value as with the current price. There's nothing new here. Now, what's interesting to notice is what happens when the price changes, right? So if the price goes down, so from 4,000 goes, for example, to 2,000, then what we see is that the composition of our investment, the composition of our position basically changes. And so we used to have 4,000 DAI. Now, the quantity of DAI that we have in our position goes down, so we only have 2,828. And then our position in Ethereum basically goes up, right? So we receive Ethereum. We're basically giving DAI and receiving Ether, pretty much. And in general, basically, this is also what caused the impermanent loss, meaning you always end up having more of the asset that lost value. And so in this case, Ethereum lost value, we gained in Ether, and we lost that. So what's interesting to notice here is that in this case, you as an investor, you gave your DAI and you received Ether, right? So it's important to notice this because it's going to be key to understand the concentrated liquidity with. If this is, this is clear, then it's the same thing happens obviously also on the way up. So when the price goes up, so from, for example, 4,000, the price gets to 6,000, then the exact, the same thing, but just reversed happened. So, we used to have 4,000 DAI. Now we gain in DAI, pretty much. We have 4,800, and we're basically giving away our Ether, right? So we used to have 1, and now we only have 0.8. So again, like I want to make this explicit. Basically, when the price was up, right, from the initial price where we provide liquidity to potentially infinite, you as an investor, you're giving away your Ether in this case, and you're receiving that. Okay, so that's just a reminder of how Uniswap V2 works, and that's kind of the basic mechanics. The thing that I wanted also you guys to notice is that we see here an hyperbole, right? But it's also very important to liquidity is a very important concept to exchanges, and we always want to have a very liquid pool, right? So let's say the concept of higher liquidity is kind of good and it favors everybody. Meaning, like when we say a liquid pool or with high liquidity, we imagine like a pretty fat hyperbole compared to a very kind of skinny hyperbole for a pool that is not liquid. And when I say that it kind of favors everybody, it's good for everybody, I mean both for the exchange and for the investor, right? So for the exchange, is obviously good. Having a liquid pool, very liquid pools, is good because the more liquid a pool is, the better price it gives to the user. The better price it gives, the more volume that attracts, and the more volume, the more fee. The more fees, the more investors, the more liquidity. It's kind of a loop. Now we know that today with Uniswap, maybe actually with the exception of Uniswap, Curve Balancer, there's also this incentive with the liquidity mining. But except for the liquidity mining, this is kind of the natural network effect of an exchange. But it's also good for the liquidity provider because, I mean, if as a liquidity provider, if I'm able to provide more liquidity, the more liquidity I can provide, the larger share of the pool I own, and the larger share, the larger quota of fees that I get home, right? So having a more liquid position is good for the exchange, is good for the investor. So this kind of led to two questions, which I think the Uniswap team with this new version really tried to answer. For the exchange, question is how can you make available a very big liquidity, a very vast amount of liquidity to the users where they need the most, right? So at the price points where they are trading the most, how can you make available a lot of it? And for the investor, how can you basically leverage your position so that you can basically provide a large chunk of liquidity even if you don't deposit that much liquidity, right? Or only depositing part of it. So these are kind of the two questions that Uniswap V3 is trying to answer. And yeah, so and this kind of really gets us into from V2 in a sense to V3 to really see what ways V3 is different compared to V2. Obviously, I mean, Jesus, if you do have questions or if you receive questions,
yes, I have. Thank you very much. I have a lot of questions, but I want to ask before the V3 explanations. Yeah.
Okay, cool. So now let's kind of dive into to what V3 does. Kind of before just diving into V3, I just want to do a last example on V2. So we said we're still looking at the Ethereum DAI pool, same situation as before. The price is 4,000. I have 1 Ether and 4,000 DAI. I want to provide liquidity to the exchange. Okay, so same condition. Now, as an investor, it would be cool if I could actually provide, instead of 1 Ether and 4,000 DAI, it would be cool if I could provide 10 Ether and 40,000 DAI. Okay, why it would be cool? Because I could own a bigger share of the pool. I could get more fees. That's pretty much what a whale would do, right? In a sense. The only problem is that with V2, I really need to have the liquidity, right? So if I don't have 10 Ether and 40,000 DAI, I cannot really materially do that. Okay, maybe I don't have the liquidity. So what the V3 basically does, okay, is basically allows you as an investor to provide liquidity as if you were owning 10 Ether and 40,000 DAI, okay, but without actually depositing that liquidity into the exchange. So depositing only the 1 Ether and 4,000 DAI, it allows you to take a position, right, as if you actually were providing liquidity for 10 Ether and 40,000 DAI. So like for a bigger, it basically allows you to provide more liquidity in a sense, but depositing only a piece of it, only a part of it. Okay. Now, the fact that you are not depositing the entire liquidity, it reflects into these two kind of boundaries, right? In these price boundaries, so which is in the Uniswap lingo, there is a lower price tick and a higher price tick and an upper price tick. Okay, so basically there's a lower bound, upper bound of the price, and so what you're saying is, okay, I can provide liquidity as if I was providing a larger chunk, but only depositing part of it. And this kind of translates into me providing this liquidity within a certain range of price. You also have the option, if you don't set this range to be limited, but you provide from 0 to infinite, then you're basically going to converge to the V2 case. Okay, so you almost have the option. You can provide as per V2, or you can kind of narrow the price range and provide and kind of leverage your liquidity more, in a sense. Now, coming back to what I kind of pointed out before, you're going to start from a starting price, which is in this case is 4,000. Okay, and what this kind of range is, where does this range of prices come from? The range comes from because from this starting price, don't forget you have 4,000 DAI and 1 Ether, right? So from this starting price, you're gonna basically, when the price goes lower, decreases, then you're gonna send all your DAI up to the point where you no longer have DAI, right? So you're sending DAI and receiving Ether up to the point where your reserve of DAI is empty. Okay, and this will define kind of this lower price boundary, lowest price tick, and the same thing on the other way around. So from the initial price, if the price goes up, you're basically gonna send your Ether, right, using your Ether up to the point where you no longer have Ether, you only have DAI, and so your reserve is empty, and that's kind of the upper price tick. Now, given this mechanism, okay, this mechanism also allow to another property. This is I saw that you mentioned this also in your post on LinkedIn, I guess, which is what Uniswap calls a range order, which essentially means what we just said. So starting from an initial price, as you move along your liquidity line, in a sense, you're using your DAI in one way up to the point where you have 0 DAI left, you only have Ethereum. So this is equivalent to kind of buying the dip, right? So you're in a certain position, you want to buy the dip, you're gonna put like you're gonna provide, or if you want, you can provide liquidity in a way that you're basically as the price of Ether goes lower, you're buying more and more Ether. Or on the other side is a kind of a take profit move, right, where the price of Ether goes up, you reach for example 6,000, and as it goes up, you're basically offloading Ether and you're converting them into DAI. The only I think caveat here is that if you know, or if you're familiar with buying the dip, quote unquote, or take profit limit orders in other exchanges like DYDX or FTX, whatever, it's important to notice that those are irreversible. Okay, which means like if you set some limit orders, let's say for example, I want to take profit if Ethereum, for example, goes to 8,000 and then 10,000, whatever, then when that order is executed, that's permanent, right? It doesn't go back. Now, in this case of Uniswap V3, that's actually not the case, meaning if the price goes, let's imagine it goes to 8,000, 10,000, you're kind of with this range order, you're taking profit, but then you don't do anything, then the price, if it can swing way back to the initial price, you're basically going to be retaken or taken back to the initial position, if that makes sense. So this is just something important to notice, because yes, it's a take profit or buying the orders, but not quite. I mean, these are kind of reversible order, if it makes sense. So this is pretty much what I wanted to say in terms of the technicalities. I know there's a lot of technical stuff here, and it's complex. So there's a lot of ground that to cover. I just wanted to make a couple of concluding thoughts. So obviously, as I said, like if you imagine that the individual investor can basically each in a different way, can provide liquidity within certain ranges of price. Then when you stack all the position together for the exchange, you're going to end up with no longer like a hyperbole, right, for the pool as we have in V2, but potentially like a, segmented curve, something like this, because maybe one investor concentrated the liquidity into a certain price range, another price range, or maybe an investor or investor across the entire spectrum from 0 to infinite. So you're going to end up with like a diagram like this, which, by the way, is exactly just in a different whatever representation. What if you look into the Uniswap V3 panel? If you look into the liquidity module, you'll see that basically that's kind of the representation for Ethereum DAI pool of the current distribution of liquidity between the different price segments, the price ranges. And so that's kind of just overlapping, overimposing the different position of all the investors, right? And the idea is that you're going to get the maximum concentration where it matters the most to whoever is doing the swap, right? To the users. And so within that range, this is specifically for stable coins where the range is maybe from 0.99 to 1.01. A lot of the liquidity will be concentrated there, and so we'll give more depth to the exchange for the user and a better prices, right? So I just wanted to wrap up, at least like before maybe some Q&A, and so I just wanted to summarize. I mean, we saw a lot of moving parts, but so the idea is like in a nutshell with what Uniswap V3 is and why it's different. So essentially in a nutshell, with Uniswap V3, you as a liquidity provider can basically provide a larger chunk of liquidity. You can provide liquidity as if you were actually providing a lot more liquidity, right? But you're not depositing this entire liquidity in full. You're only depositing a piece of it, which in a sense is almost like if you were doing a leveraged LP position, right? So you're taking in more fees because you're providing liquidity as if you were a whale, but you're also taking more impermanent loss, meaning you're taking the impermanent loss that a whale would have, but on your small liquidity. Okay, so percentage-wise, that is going to be. There is also a change in terms of the fees. So we used to have a 0.3% fee for all pools. Now it's kind of a little variable, so the investor can decide whether it's more 0.1, 0.3, 1.0. I think this is we'll see exactly how this pans out. But the other interesting thing is that it's always worth considering that you can still provide liquidity as if it was B2. If you're depositing your liquidity in full and you're covering from the entire price spectrum, then you're basically doing B2 style, and that's still possible. So that's kind of in a nutshell what that is. Like, what are the practical implications for you guys as investors, for us that provide liquidity? Consider this is very new, right? Like, it was released last week. We still need to see in practice how this pans out, and like a lot of testing has to be like market testing in a sense is still to be done. But there are a few kind of key differences. So first off, when you provide liquidity, you no longer get an LP token. Like everybody now is used to have LP tokens. If you do Balancers, SushiSwap, Uniswap, Curve. Now with Uniswap, if you provide liquidity, you're basically getting an NFT, which is something completely new, right? Also, if you think in terms of interoperability with farming and all other incentives, that's new, and we'll see exactly how that works. But that's definitely something different. In terms of the fees, right now, you're getting them as part of the pool, right? So you don't need to claim the fees. You may claim the liquidity mining, but you don't claim the fees. With Uniswap V3, they don't accumulate inside of the pool. You're going to need to claim them separately. There is definitely more management, right? So we saw like this liquidity provision between price ranges. That kind of leads to the need to adjust the price range, and so maybe new tools that you need to use, and definitely like the gas cost. I think with the current gas price, Uniswap V3 is definitely very expensive to use, also because the gas price is high. And so I think like they're actually deploying Uniswap V3 on optimism. I think that is going to be key because right now it's very, very expensive to use. So especially think about if you not just have to provide liquidity, but then maybe, I don't know, in a few days, adjust the price tick and then, do it again. It's going to, it's actually very costly, And yeah, in terms of the actual ROI, right, in terms of the actual yield compared to, Uniswap V2, Sushi Swap, all the others, I think it's still to be seen what what the impact really is. Meaning, for sure, is more advanced. For sure, is more. If you manage it well, it can definitely probably yield a better result. But then cost of management is definitely something that we don't have today because it's very passive. Right, AMMs are very passive. You pretty much set and forget. I suspect it's not going to be exactly the case with Uniswap V3, because if you do that, then you're going to be outcompeted by other investors that are much more active than you, and they adjust the prices all the time. So we'll see exactly what that means in terms of ROI. I think it's too early to really see. We need to see it in the market for a certain time. But definitely excited to see what actually happens. So these are kind of my, Jesus, these are my thoughts. Yeah.
Really amazing. Thank you very much for all your insights. And I have some questions for you. And yes, always talk to. So let me explain my questions. First of all, we have two main ideas, no? First of all, do you think that permitting to have more liquidity or less slippage are going to increase the volume of trading? Because one of the things is if this improvement really is going to add more volume to the space, because in that case we are earning more fees. If not, it's a question on how we compete for these fees. Understand? Imagine we have 1 million of fees or 1 million of revenue of AMS that we have to share with all the pool liquidity providers. Do you think we are creating more revenue to share, or we are creating an environment where you have to compete with the old revenue?
Right. If I understand your question, you're asking, is the pie gonna get bigger?
Yeah.
Or is going to be more competition? So I think, I don't think the pie is going to get bigger because of Uniswap V3. Meaning, like the pie is going to get bigger if there is more adoption, there are more swaps. Okay, so if, for example, Ethereum is growing and there's a higher need for swaps, then that is going to drive the size of the pie. Okay.
Yeah, but let me know if we have very bad slippage. You are in some way not doing very, very attractive to do high frequency trading. So in some way, to have more competitive slippage allows more trading in some way. But the other thing is probably Uniswap are going to compete with prices with curve. That is one of the. So I probably don't know if the pie for all the environment will be bigger, or the pie for Uniswap is going to be bigger because it's going to compete with the curve for other environments.
Right. Yeah. So I think that you're right. So let's consider with the same adoption as there is today. So fixing the adoption. Okay. I think that with this iteration, Uniswap can probably, we'll see exactly, but can probably attract more volumes ideally. I think one question is about the gas fees, right? So if this more efficient or less efficient, I think that's gonna, it may impact. So that's one point. But ignoring the gas consumption for a second, I think yes. With the same or even smaller liquidity actually deposited into Uniswap, it can probably give better prices. Now, if you give better prices, then they have a lower slippage, a lower spread, they get more volume. So that in a sense is true. I think though within Uniswap, so let's assume that Uniswap maybe in terms of volume even grows compared to today, could be. But then within Uniswap, there will be more competition. Will be in my mind. We'll see what happens, but probably harder for the investor inside of Uniswap to capture that. Probably even to capture the same return that he was used to. Not even like capture a better. I mean, we'll see what happens exactly, but simply because within the context of Uniswap is going to be much more competitive. There will be much more levers to pull to outcompete the others, right? So whoever is smarter and maybe doesn't care too much about the gas prices, so you can readjust all the time, it will probably take the profit that today are taken, maybe some of the profit that are taken from the arbitrage, they will go back to these quote unquote active LPs. And I think the active LPs, chances are they will also take, fees and yield that today is taken from the passive LPs. So I think the active will take from the arbitrage and arbitrageurs and from the passives. And we'll need to see what the passives are left to, right? In a sense.
See, in that question, I have seen here a sample of this pool that is having out of profit right now. Probably what it implies is that probably there will be like aggregators that can really move the liquidity together in order to be more efficient for fees. Because as I understand, there is more competition. There will be who is going to move in order to be optimized for some kind of some kind of prices. But right now it's very, very efficient. I have seen, this is the pool that was created, the third pool that was created in Uniswap V3, and we see the returns that are very, very high.
Right. Yeah, so, I mean, this is I also saw that in for example Ethereum DAI. I provided some liquidity and is actually very. I mean, it looks is very very efficient at the moment. So we'll see. I think right now, to be honest, there's probably in a sense no competition inside of V3 because they're so new that. But for example, I can tell you something. I mean, I'm in touch with a pretty big market maker in traditional, centralized exchanges right now, and they're looking to do a strategy on V3 to do active market making. So once you do that, right, then there's going to be, in a sense, I think, competition.
I think it's becoming competition, no? And in these terms, what do you think is the more clever strategy? To put it here in one kind of, because you have to select between.
Yeah, I think it needs to be. I think it needs to be calculated. So that's why also what I'm doing with liquidity folio. Hopefully, we'll have a lot of answers to this and a lot of tooling. But I mean, ideally, you want to provide the liquidity across the price range, which is more relevant. But it's not that simple because you also need to take into account the liquidity existing in the pool. So depending on where the others provided the liquidity, it may be, impact your decision in a sense, right? So the optimum, quote unquote, it depends where, like for example, for a stable coin, I mean, there's no really a lot of variability because, that's pretty much what it is. But for other assets, some people may, I don't know, you see even here, right? Like it's not it's pretty centered across a price, but it's not quite, right? You see like it's a little imbalanced. It may be on one side there is more, on one side is less. There's people that want to take profit, people that want to buy the dip. There may be different reasons why they choose one liquidity or one range. And so depending on where the others are, then you may decide to do one allocation or the other.
In that case, people is like positioning more, expecting Ethereum could really go down. They are putting more liquidity in the downside than in the upside in some way.
Yeah, or maybe they want, as we said, we want, it could also be that people want to buy the dip. So that could also be, but I think it's important to notice that it's buying the dip, but so long as you close the position, right? So if it goes down and it goes up again, then
you don't buy the dip. Okay. And about the competition between Curve and Uniswap, let's see one of the pools. Do you think they are going to damage this? Do you think they are going to damage Curve? What do you think is going to happen in the competition of stable coins? Because that's probably, this is amazing.
Yeah, it's so narrow, right? So everybody's running.
All the people is like in this small space.
Yeah. So, that's a great question. I mean, I think also, to be honest, I know the Curve is working on their V2 or V3, whatever the number is, and again, their entire focus is on the use case of stablecoins. So they don't need to cater to any other use case, which can, like, how does that translate into practice? Like, one thing that I can think of is really gas consumption, because think about it, like the way Uniswap works is actually a very complex smart contract compared to Uniswap V2. It is much more complex. So like it also for the user, right, it costs more. For example, the user doesn't know this, but it costs more when you make a swap within a certain, you see, like over there are like discrete price sticks. Now here you don't really see it, but there are individual bars, right? So when the swap happens inside of a bar, it has a cost. If the swap crosses multiple bars, right, because maybe it's a very huge swap and so it moves the price, then it has a higher gas cost. So if you were to build Uniswap V3 but only for stablecoins, you could probably make it more efficient, and I think that's what the Curve is doing. So how this is gonna, right, is it gonna outcompete completely Curve? I don't know. Definitely is more competitive than before, but I think also Curve will probably respond.
Okay, so thank you very much. Any other thoughts about, well, we will use your platform, because really, if it was difficult in the past to attribute the performance, right now it's critical to understand what are really your strategy in this kind of prices, and also to get all your past performance. That in that case can really, because right now in your tool you have like a return that was calculated, but in that way, how you can calculate your returns in this, you have to be have an expected probability range, or what do you how do you frame this way of thinking about the returns? You in a range, in a medium?
Yeah, I think it's complex. In my mind, it's not too different in a sense from before, meaning at the end of the day, as you shown before, you have $2,000 invested, and then you have a certain amount of money that is coming in. So ultimately, that is your return, okay? Right, so you put in 2,000, your unclaimed fees are $39. So that's more or less, which is what, 2%, which is probably in I don't know, they launched last week, so it must be pretty recent, right? So it's actually let's call it 2% in 10 days, or maybe no, actually 5 days.
No, not 12 but an unclaimed that damages the compounding returns. So that's also not a good idea, no, of the unclaimed, because this in some way makes.
So it's not compounding. So in the case of Uniswap V3, it's not compounding. So you can claim or not claim, but they're not basically the fees are no longer going inside of the pool.
But do you think it's a good idea that?
But it's really by construction. So the way it's built it's almost like it doesn't allow to do that functionality, because the liquidity is an NFT, and I mean, there are valid reasons why they did that, but that's the outcome. I know, but by the way, I think also, like, think about this. There is also, I mean, one thing is the technical aspect, but also there is a, in a sense, communication aspect, or think about understanding from, by the users of what they're doing. I think everybody right now is understood well, not everybody. I think liquidity providing is still pretty hard for most people. So it's already pretty advanced. I mean, here we're taking it to the extreme, right? So I think my question that is not answered yet is, who is going to use V3? Is it going to be like professional market makers? So that basically, instead of doing arbitrage, now they're adjusting price tick, which is, in a sense, not too different than having an order book. Okay, I mean, if you imagine to have like for the individual tick, which is maybe a small price increment, that's pretty much as putting or like an order, a sell order, buy order. That's pretty much the same thing. So who is going to be the end user of V3? Is it like, in a sense, a glorified order book, which, by the way, is great. There's no problem with that. But I think it's I don't know. It feels like a different, in a sense, user base. If you see what I'm saying.
Okay, we have only to finish 2 questions. I don't know if you can read from Mojo Mix, and they say, I assume you can readjust the upper and lower tick dynamic at some point, right?
Yeah, you can do that. It's just a question of gas cost. So,
gas cost. But it's very expensive right now. And the other is, he asked you, if everyone else is using F3 leverage liquidity provision, we are back to square one in terms of my relative share of the push commission, right?
If everybody, sorry, if everybody is providing, so
if we are back to square one, yes. If always people is leveraging your returns in some way, they're going to have the formula.
So I mean, even today, I mean, the formula is still the same. It's still the X times Y, whatever. The thing is, if everybody is providing liquidity in the same price range, then yes, you're right. Like, you're competing again everybody else. So that's true. And I think the thing is, when the price really moves, right? Whoever, I mean. And by the way, this is to be seen. Is it going to be really important to readjust? Is it going to better to have, I don't know, a wider angle, in a sense, a wider price range, a smaller price? I think we need data to really see, because that's also depending on the market, right? The volatility and a lot of other things.
Okay, and my last question, I thank you very much, Federico. Do you think that this, if Uniswap version 3 finally gets all the markets, do you think they will impact in the volatility? Because that needs to decrease the volatility in some way, no? Because they are going to do harder to move the price. If all the people use V3
right,
and all the people put the liquidity in very run scenarios, as I understand, volatility is going to decrease in some way, or that's the impact that we can have.
Yeah, I'm not sure, because volatility is not it doesn't depend on on this. I think it's going to reduce the slippage, but not necessarily volatility. Like, volatility depends on the market that change the mind very fast.
If you want to move the market, and imagine you should version 3 have all the liquidity.
Okay, I see what you mean. So
to put more trade in order to move the price.
Right. No, that's true. That's true. I mean, to move the market, you're right. Like, to move the market, I think, though, it's gonna be maybe more of a step change, meaning like, it's gonna be very hard to move the market 5%, and when you pass that, it's gonna be like very very sudden change.
Yeah, because in that case, these points are like points of selling. If liquidity
selling points
in some way. We are defining like the resistance of the. In some way, we are defining.
Right. Yeah,
Points.
that's I think is a good way to look at this. And look, it will be, but think about this: it's the same as an order book, no?
Yeah.
So, like people, that's why I think like people will change this. They will move this as the market and the other exchanges, and they want to do arbitrage. So, but given how big Uniswap is, that's also could also be something.
Okay, thank you very much, Federico. I invite you to analyze version 2 of Balancer that for sure we have a lot of impact, and also to see what's really finally the data that we have the first week of version 3. I really not too much positive about this version. In my opinion, I don't know if you have.
You mean the Balancer or Uniswap?
I think Balancer add more revenue to the table in the version 2. I don't know if Uniswap with the version. The only thing that probably they can add to the table is to have more trading because of the less slippage. But I see like a competition inside of the environment with other exchange and even without inside the liquidity providers. But I see also increasing the fees. I don't know if it adds too much value to the table. I don't know what is your opinion about Uniswap version 3, but I think Balancers puts more real value on the table for the liquidity providers.
Yeah.
What do you think about? If you have some thoughts about that?
Balancer, the new version, to be honest, I just I need to look into that. I just spoke with Fernando a few times, but high level, I don't quite know.
They're going to add the fund managers returns. That's another. It's like in some ways like YM adding compound to AMM fees. So I think that you add more revenue to the table to the liquidity providers. But in that case, I don't see too much I
think basically, I think what's happening with this is that the protocols are moving more, or this DAOs or companies or however we want to call them, they're moving more, or at least in case of Uniswap, to the protocol side on the protocol layer and less in the application layer. Meaning they're getting more and more sophisticated as protocols, but to use them like for the average user or the average investor will be harder because then you need applications that actually manage the protocol, like they adjust the price or whatever. If you don't, then again, like we don't know if it's going to be good or bad. Likely, I don't know. I mean, I still don't. We need to look at the data. Like for example, the position that you show me, you look into that and you say, wow, that's great. Why not? Like you made 3-4% in 5 days.
That's amazing because, but it's because they are more because it's the person who's competing in the best range, or is because they are more trading. That's probably the question that we have to ask ourselves.
Well, the liquidity, I think the liquidity that is in there in Uniswap V3, like all in all, is pretty small, and but still, like is able to get better prices very often. I think also because in the price doesn't include the gas. As I looked into making some swap, the gas was pretty ludicrous. So I don't know if that's, you see what I mean? Like if that's a factor. But yes, I mean, you look, for example, your position on this one, and we can say, well, not too bad if you consider that there's no liquidity mining, no unsustainable stuff. So we'll see. I think, look, in general, DeFi is so early, and there's so much stuff to build in a sense that probably, I mean, likely there's space for everybody. Like a year ago, I would have told you oh look, there's going to be only one AMM, and it's going to be the biggest, the network effect. And then liquidity mining came, and sushi swap and vampire attacks, and now how many liquidity exchanges we have? I don't know, hundreds. Is it going to continue like this forever? Maybe not, but still, like, probably is going to be more than one, meaning like the top 5, 6, 10, there's likely space for everybody. That's what I would imagine.
Okay, thank you very much, Federico. Really, really insightful or your presentation or your thoughts. So really will continue working with your platform. I am subscribed to your platform. Really important to understand the returns, and congrats for your work.
Thank you, appreciate it.
I'm sorry for the work that you have to do before all these changes. You will have to rework a lot of things. So
yeah, there's gonna be some fun.
That would be great for all the people who is providing liquidity to these tools. Thank you very much. See you in the next webinar to see more things.
Fantastic. Bye-bye. Have a good one.